Hi everyone, so today we'll do a stock analysis on VTLE Energy, ticker VTLE, and it's a US oil and gas company and they do exploration and production. Here is just a slide in case you guys wanted to reach out to me. So I've got Discord, X, and email. So don't hesitate to just send an email or just chat. I mean, that's the whole point why I did this channel, is to just discuss with other people. So yeah, don't be shy. Quick disclaimer, I'm not a financial advisor. This is my own research, up to you to make your own decision. So here's the usual summary. We're gonna go with the company profile and all the descriptions, assets, unit cost, reserve. Then we go do the fundamental analysis with the looking at 4 years data, insiders and all that. And then we go do technical analysis, price catalyst, and end up with a conclusion. So here's a quick description of VTLE Energy. So it is an energy company that engage in the acquisition, exploration, and development of oil and gas properties in the Permian Basin, West Texas in the United States. So before it was called Laredo Petroleum, and it's changed the name to VTLE Energy in 2023, and it was founded in 2006. And it's the headquarters in Oklahoma, Tulsa. So as soon as I started doing the video for this company, I actually looked at the news and realized that they were gonna be potentially acquired by Crescent Energy. So because of that, I actually realized, I was wondering if it was really interesting or not to do the company profile and like doing a whole video about it. But then I realized maybe I could be talking more about the acquisition, the company, and then I would do another video about Crescent Energy to then explain whether this acquisition makes sense or not. So first of all, they want to acquire the company for 3.1 billion in actually all shares. So that means that they will actually be some sort of merger between the two companies, and they will be, so the goal is that VTLE shareholder will get 1.9 share of Crescent Energy, and that so at the end it would be like it says that it's like 5 or 10% premium, but I'm gonna show later the price chart and explain what my opinion is about it. And they did just like pretty much giving all the reasons why that would be a great acquisition. And I can't deny, on the side of Crescent Energy it looks pretty good, but on the side of VTLE Energy I find it a little bit negative, because the company is so undervalued and the premium they're giving is nearly nothing. Because it's literally all-time low nearly where they're trying to acquire it. So yeah, it would be a great deal, but I will tell later a bit more. But I wanted to talk about it so that you guys know that it might not last long, that company, and being acquired by someone else. So the acquisition will be done at the end of 2025 if it happens. And then like it will represent like 77% of Crescent Energy and 23% of VTLE Energy. So that means that it kind of, you still are a shareholder of a company, but I won't be a VTLE Energy anymore. It will be the merger of both, which is not that bad because the other company is quite undervalued as well. But just VTLE I think is way more undervalued than the other one. So that's where we gonna go through. So let's start with the assets. So the assets are located in Texas in the US, and this is the circle on where they are. And then as you can see, the bigger map here where you can see all that is in yellow is their land ownership. So here is the net acres. So there's two main projects, the Delaware Basin and the Midland Basin. And I think the important things I wanted to mention was the fact that their break-even price is at 52 and 55, which I think is not that bad overall. So obviously much higher than other like countries, but like compared to the fact that it's in the US, I think is fair. So compared to current price at 60, they are profitable, but not by much. And then they are ownership, so I'm not too sure what they are, the two, but between let's say 50 and 80% ownership. This is the inventory. And then yeah, that's about it. So here I wanted to talk about the goals of the company, what they're trying to achieve in the next few years. So they have quite a bit of debt. As you can see in here, they have 1.5 billion to repay. And actually most of the repayments will be in 2027 or further after that, 29, 30, and then 32. So they have plenty of time to actually repay. They are trying now to repay 310 million of debt repayment for this year, which sounds like a huge amount, to be honest. I'd be really surprised if they can achieve that. That would be making the company even more interesting. And then after that, you can see that their production in here, it's a bit small, but they are pretty much increasing year on year. So it sounds like they are on the right track. So this is the first time I found this on the oil and gas companies. It might be more popular in smaller businesses, but they're actually hedging. So they have like ways to hedge their production with crude oil, nat gas, and nat gas liquids. So obviously I heard already in the past, but I never really seen in the slide so far. So it's interesting what they do, but I wouldn't really understand, to be honest, like the swaps and collars. It's just to share with you that they are actually hedging their price, considering they are higher cost producer than other places around the world. It might actually be relevant for them to hedge. So here it is. If you want to know more about it, I think you have to look at it. I'm not too aware. So in this slide, I found it a little bit technical. So for me, so I would say that it goes a little bit beyond my knowledge, but I will try my best. So in here, all we can see is that there is 11 years of high quality Permian Basin inventory. So I'm guessing that means that they can mine for another, like oil for another 11 years. So their inventory has been increasing a lot as well from the 2023 to 2025, and the pricing, so it goes from sub 50, 60, and 60, 75. So that means that basically if the price of oil is over 75, they will start pretty much returning a lot of cash, but under that they might be break even, or should I say losing money. So to me it shows just in this slide that it's kind of a leverage bet. So it's like more like, let's say if the price of oil is really depressed, like now at 60, you will not do well with this company, but if it goes someday to 100 or more, you get a really good return on investment, because they will start printing cash a lot. But yeah, at this point it shows that it's actually a bit tricky for most of the inventory to be so at those prices, because like now we're at 60, which is like, I mean, good, because it's like 50 to 70% they can still sell, but they won't make much profit. So in here, what I wanted to share is that there's 70% of proven developed reserve and of 455 million barrel. That's like 300 to 250 million barrel that you can develop, and like that. So the proven developed is pretty much well diversified between natural gas 31%, oil at 37%, and natural gas liquefied at 32%. And then in there it shows as well that basically most of the inventory will actually be very profitable over $80. So it's a leverage bet. So I would say that if oil prices stays at 60 like it is today, it would be a bit difficult for them, and I would say their cash flow will really struggle. But if the price goes way beyond 80, like $100 or $150, that would definitely print cash like no tomorrow, and definitely will the price of the share will really explode. But it at the same time, if they can't and the price of oil goes to 50 or lower, that would that company could literally go bankrupt. So that's the risk. Obviously, it's not so likely by the look of it, but you cannot ignore the fact that if oil is depressed for way too long, it could have that potential risk. So now let's look at the fundamental analysis of VTLE Energy. So the market cap is 680 million, which is relatively small. The enterprise value is 3 billion. So most of it is because of the debt and all that. That's probably why the market cap is so undervalued. I mean, so small. The PE is at 3, and forward PE is at 2. This sounds like really crazy. The price to sell is at 0.35, price to book at 0.33, and enterprise value to revenue and EBITDA is pretty good. I mean, especially 1.5. The to EBITDA is a bit higher, but anyway, I'm not looking at that with much importance. Then we have the so the income for last year was negative 700 million. So it shows that it might have been, I'm not actually sure if it's relevant, but anyway, the debt is 2.4 billion and the cash 30 million. So, and the leverage free cash flow at minus 900 million. It doesn't look appealing when you look at it like that, because I think the debt is what is actually waiting for all the problems overall. Then there's insider owning 22%, so this is really good, and then 77% institution, so there's no retail. The percentage float shorted is 26%, so it sounds like they're actually thinking that the company might go bankrupt. So yeah, I mean, you can clearly see in here that the risk is high. Like, you can see that at $60 or lower, which has been past 6 months for oil, it's pretty difficult for them to survive. And you can clearly justify as well what they were talking about, where price goes at higher than 80. That's when I think they will start really making cash. But at the moment, it's more like survival mode. So the acquisition of VTLE Energy, which is at 0.33 price to book, and Crescent Energy is at 0.5. So what I was saying earlier was that because VTLE Energy is so undervalued at 0.33 book compared to the 0.5, I thought that, basically VTLE Energy will have to increase by 50 or 60% to be equal to Crescent Energy price to book, right? So yeah, they're doing a pretty good deal in that sense, that the price to book is very much lower. Obviously, it's not the only element to look at, but it's just to show that, to me, it looks like they're having a good deal, but the risk for VTLE Energy is their debt. So I wonder which one got in contact with which one, if it's VTLE Energy because they don't think they can survive, or if it's Crescent Energy because they see really good value, or maybe the fact that when they are combined together, they will be much more competitive. So yeah, I just wanted to show what I looked at to see how it could be interesting or not. So if you look at the insider buying and selling over the past 10 years, it's been pretty much only selling, a little bit of buy in between, but mainly selling. And I would say the major person that have been selling is Campbell Richard. So that's the one that has the most share held. And yeah, I don't know if that's really relevant, but it's never really good when insider are not buying, or at least that they are more selling. I'm not really liking that part. So in here we have the balance sheet, like equity, assets and liabilities. So if you look at equities to liabilities, the red part is bigger than the green, which means the liabilities is higher, so it's never really great. But honestly, looking at this company, considering they were highly leveraged, it doesn't actually look that bad. Then we can see the balance sheet overview. So the total equity is actually rising, so they probably acquired other projects, and then the debt is following pretty much. But it's not catastrophic when I look at it this way, because their assets are growing as quickly as their debt in a way, if not slightly higher. So that sounds like it's looking good like that, right? Then the current asset to liabilities, I mean, this is where I'm really worried. Like the liabilities is much higher than the current assets. So I'm not too sure what is the reason. I could be looking deeper into that, but I didn't, considering they're probably gonna be acquired anyway soon. But this is usually a concerning part. Do they actually keep getting more and more debt? So that's why they can actually cover this short-term current asset to liability. I'm not too sure, but this is usually not a great sign when you see this. And then yeah, I mean, you can see in the total asset to liabilities and equity, they're literally growing like crazy, and the debt surprisingly is not growing as that quick, but the equity is growing at the same time. So that might be why they're just leveraging more and more and more by acquiring more and more assets. So short term might be okay with the current asset to liability, but long term it might not. So in this second slide for the fundamental analysis, you can see that the pretty much the earnings were not that bad from 22, 23, and it's been pretty bad in 2024. Yes, in 2024 it's starting to be pretty bad. And that is all related to oil and gas price. I will show you guys later. So then the earnings per share were pretty good until like 2024, and then like the cash flow overview doesn't look good, but considering they are actually leveraging a lot, it might explain why this happens, but it still doesn't look good to me at all. It's just a little scary, considering I like always to have like kind of great fundamentals, but sometimes you can have like stocks like these that are more speculative. At least they are based on fundamental and not just like on dreams. So I would say it's always better, but still like doesn't look great. And then the shares are issued are increasing, but that's normal because their assets are growing so fast that I'm not that surprised. So here's the technical analysis for VTLE on the weekly. So as you can see, it's pretty much since 2012 it's been going down like pretty much, and in 2020 it found a bottom at around I think like 10 or 15, and it started to rise again, and then since then been going back down. So I will show you later the that is related to oil, but I mean honestly, like oil hasn't really gone down like this. So yeah, it is a pretty risky stock and small cap, and you can see that it's not done well in the past 10 to 20 years. So on the daily, just to show, it seems to have found a bottom in here, and it might actually end up going back up. But I would say to confirm that we have to reach that gap there. So we have to get higher than that top, because I think that will make confirm a change of trend. But at the moment, it's still on downtrend. Yeah, so the company that want to acquire, like so Crescent Energy, willing to acquire VTLE Energy at these prices here with a 5% premium. It's almost, I think, because it's literally all-time low. And I'm just thinking like, oh, they want to acquire this company literally at all-time low, and yeah, it might be worth only that, but it just, to me, feel like it could easily be worth like 40 or 50, in my opinion, and still be very undervalued. So yeah, I honestly think that for people that already own VTLE Energy, it doesn't sound like a good deal when you look at the price long term. And oil price overall, so since 2022, 3 and 4, the company has been doing all right. It's in 2024 in here, that's when they started not doing as great. So as you can see that it's lower than before for sure. And then like I think in 2025 we haven't seen the data because it's past, but it won't be much better, at least same or even a bit worse. So yeah, you can see clearly that it's not looking good. So unless the price rise above $70, I believe, because it seems to be to me that $70 is for them that that limit. So I would say anything under would not be great, but anything above 70, so it's like 80, 90, will make them profitable. So it kind of match with the earnings and everything and the whole story I shared earlier. So a very leveraged bet. So yeah, and high risk. So for conclusion, I would say that the company is very undervalued. We cannot deny that. That's an advantage. And then the huge growth, it sounds like a really appealing part, but the negative part is the debt and dilution. So let's talk about the risk. So VTLE merger seems to be very undervalued. Even I say very. And then Crescent Energy is undervalued but less, and the merger is not ideal for VTLE investor because basically the stock is nearly an all-time low, very close, and unless people like investor would at 25 or under, they're screwed. And I'm probably part of it too because I bought a bit higher, but it's not catastrophic. Then the high debt and risk of bankruptcy. So yeah, I mean, if the oil price doesn't increase the next 1 or 2 or 3 years, there's definitely a huge risk of bankruptcy. And especially that the debt will struggle to be paid back, which still affect the price anyway of the stock and the dividends. So the huge growth fueled by debt and dilution. So this, we're going back to the idea, but yeah, debt and dilution is never really great. It's great that there's huge growth, but the problem is it only works if there is like a really high oil price. So until then, it's like a little bit like a lottery ticket in a way. And then like the technicals for the stock is looking pretty bad, to be honest. We might reverse, but we don't know short term, but long term it doesn't look good. And then the oil price is basically not that great at the moment, especially at $65 for the company. So we have to really push higher. So let's see how it goes. But yeah, overall, I don't think that acquisition is great for VTLE investor. But at the same time, if they were about to, let's say, go bankrupt or being even more diluted, it might be better that Crescent Energy buy, like get them, and then hopefully the new share of Crescent Energy will allow more better valuation. So yeah, that's all I would say about it. So I hope you enjoyed the video, and seen you in the next video. And I wanted to just add that we will be talking about Crescent Energy later, and you will be able to get a bit more detail on what Crescent Energy looks like and how on their side how it looks interesting or not. So see you in the next video.